Good day, investors. In this video, we will be taking a closer look at ASML, ticker symbol ASML. The company just released its Q1 earnings, showing strong performance in both revenue and net income, highlighting continued strength in the semiconductor space. So in this video, we'll break down the recent earnings and fundamentals, then take a look at the valuation, and finally, I'll give you my personal take on whether ASML stock is a good addition to your portfolio right now. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. Thank you very much. Now let's take a closer look at the Q1 results. ASML reported total net sales of 8.8 billion euros, which is a very strong number and shows continued demand for its lithography systems. Out of that, 6.3 billion euros came from system sales, while 2.5 billion euros came from installed base management, which is the service and recurring part of the business. This is important because it adds more stability and predictability to revenue. Looking at profitability, gross margins came in at 53%, which is very strong and highlights the pricing power ASML has. Operating margin was 36%, and net income margin was over 31%, which is extremely high and shows how efficient this business is. And finally, earnings per share came in at 7.15 euros, reflecting strong overall profitability. So overall, this was a very solid quarter, with strong revenue, high margins, and continued strong performance. Now, beyond the numbers, what's really important is what's happening on the technology side. ASML continues to push the limits of EUV lithography, and in Q1 they introduced an upgrade to their NXE3800E system. This new enhancement improves throughput from around 220 wafers per hour to 230 wafers per hour. And that might not sound like a huge jump, but at this level, even small improvements can translate into massive productivity gains for chip manufacturers. The system also includes improvements in areas like wafer handling, faster stage movement, and better metrology, which helps with precision and alignment. And this is key, because as chips become more advanced, the manufacturing process becomes more complex, and ASML's machines are absolutely critical in enabling that progress. Now, taking this one step further, let's look at ASML's long-term roadmap, because this is where the real story starts to play out. ASML is continuously pushing forward its EUV technology, with a clear roadmap extending well into the next decade. We're moving from current EUV systems into more advanced generations, and eventually into high-NA EUV, which enables even smaller and more powerful chips. And this is critical, because as the industry moves from 3 nanometer to 2 nanometer and beyond, chip makers will need more advanced lithography, and that's exactly where ASML comes in. What's also important here is that each new generation improves both performance and productivity, which helps customers scale production more efficiently. So overall, this roadmap shows that ASML is not just a short-term story, but a long-term structural growth company, positioned right at the center of AI, advanced computing, and the future of semiconductors. Now let's break down where this revenue is actually coming from. Starting with technology, we can see that EUV makes up the majority of system sales, accounting for around 2/3 of the total. And this is important because EUV is ASML's most advanced and highest margin product. The rest mainly comes from RFI systems and other older technologies, which still play a role but are less critical compared to EUV. Looking at end markets, the business is almost evenly split between logic and memory, which gives ASML good diversification across the semiconductor space. On the regional side, a large portion of sales is coming from Asia, especially South Korea and Taiwan, which makes sense since that's where most of the advanced chip manufacturing is located. And finally, when we look at units sold, EUV systems are relatively low in volume, but extremely high in value, while other systems are sold in higher quantities. Now, if we zoom out and look at the bigger picture over time, we can see how ASML's revenue has been evolving. Total net sales reached 32.7 billion euros in 2025, showing strong growth over the past few years. And 2026 is already off to a solid start, with 8.8 billion euros reported just in Q1. Logic remains the largest contributor, driven by demand for advanced chips, while memory also plays an important role, although it is more cyclical. At the same time, installed base management continues to grow, adding a stable and recurring revenue stream to the business. Now, from an investor's perspective, capital returns are also an important part of the story. ASML intends to declare a total dividend of €7.50 per share for 2025, reflecting a solid and growing income stream. Part of that has already been paid through interim dividends, with a final dividend of around €2.70 still to come. On top of that, the company is actively returning capital through share buybacks. In Q1 alone, ASML repurchased around 0.9 million shares for a total of about €1.1 billion. And if we look at the long-term trend, both dividends and buybacks have been increasing steadily, highlighting strong cash flow generation and a clear commitment to shareholders. So overall, ASML consistently returns capital, making it attractive for long-term investors looking for both growth and shareholder returns. Now looking ahead, let's take a look at the outlook. For Q2, ASML expects total net sales to come in between 8.4 and 9 billion euros, which suggests continued strong demand. Out of that, around 2.5 billion euros is expected to come from installed base management, again highlighting the importance of the recurring revenue segment. Gross margins are expected to remain strong, between 51% and 52%, which shows that profitability should stay at a high level. For the full year 2026, the company is guiding for total net sales between 36 and 40 billion euros, with gross margins between 51% and 53%. So overall, the outlook remains very solid, with continued growth, strong margins, and no signs of major weakness in demand. Now, after looking at the fundamentals of the company, let's take a look at what analysts are expecting. According to stock analysis, the overall consensus rating on ASML is a buy, which reflects strong confidence in the long-term story. The average price target is around $1,451, suggesting the stock is currently trading close to fair value, with limited upside in the short term. At the same time, there's quite a wide range of estimates, with the low target around $950, showing some downside risk, while the high target goes all the way up to $1,971, indicating potential upside of roughly 29% if the bullish case plays out. So overall, what this tells us is pretty clear. The long-term outlook remains strong, but in the short term, the stock may already be pricing in a lot of that optimism. Now, if we take a look at the stock performance from stock analysis data, we can get a better view of the current setup. ASML is currently trading at around $1,518 per share, giving it a market cap of roughly $584 billion. The stock is trading close to its 52-week high, which suggests strong momentum, but also that a lot of optimism may already be priced in. Looking at valuation, the current PE ratio is around 51.7, with a forward PE closer to 43, indicating that the stock is still trading at a premium. But that's expected given the company's strong growth and market position. And if we zoom out, the stock is up over 140% in the last 5 years, showing very strong long-term performance. So overall, ASML is clearly a high-quality company, but at the same time, valuation remains elevated, which is something investors need to keep in mind. So when we bring everything together, ASML just delivered a very strong quarter, with results coming in at the high end, showing both strong demand and high profitability. A big part of that strength is coming from the installed base business, which continues to provide high-margin, recurring revenue. Now, looking at the bigger picture, AI demand is clearly accelerating, driving massive need for both memory and logic chips. In fact, many customers are already sold out for next year, and supply remains constrained. And that's key. Demand is not the problem here, supply is. Looking ahead, ASML is guiding for another strong year, with continued growth and solid margins. At the same time, the company is scaling capacity to meet that demand. And on the technology side, ASML continues to improve productivity and push high-end AEUV, enabling more efficient chip production. So overall, AI is driving a multi-year semiconductor supercycle, and ASML is right at the center of it. But with the stock already trading at a premium, this becomes more of a long-term compounder rather than a short-term value play. So in my opinion, I like this as a long-term hold, and I would be looking to add more on pullbacks or market corrections. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching, and happy investing.